When will DocuSign begin to rise and go to the right? I've been asking that question for a couple of years now. This stock is in the right industry. They continue to grow their revenues, they're profitable, and they generate free cash flow. But their stock has seen a lot of down action recently. It's seen a lot of volatility over the last year. And I wonder when this stock's really going to catch fire and go up. I'm going to take a look at this stock, do an analysis, and see if I should buy, hold, or sell this stock. I'm currently a stockholder, so I've been an owner of this stock for some time. I'll update my valuation, which will be based on free cash flows and earnings per share. I'll take a look at what analysts are saying and overall make a decision on this stock. I look at three areas. First, the company. Second, the balance sheet. Third, the discount available on the stock. Before I jump into my analysis, just a quick reminder, I'm an individual investor, just sharing my experience on DocuSign. I'm not recommending you buy or sell this stock, and I'm not providing any financial advice. Also, I'm being sponsored by Mumu, which is a brokerage, and they offer new account holders a pretty nice offer, which is 8.1% interest on cash for the first 3 months when you become an account holder, and then 5.1 after that. They also are giving out 15 free stocks for new account holders, which is pretty neat. If it's something you're interested in, there'll be the details in the description of the video where you can get signed up. Thanks. So first, the company, DocuSign. I really like that they're a software company. I like holding software companies. They tend to be profitable, grow, not need a lot of capital. So I really like the industry. I think DocuSign is the leader within the space of digital capture. They are the leader, but it is somewhat of a limited addressable market. It's going to be hard to grow outside that box. And I think that's what's held back the stock. So I like the industry. I think the company is well operated, but I'd like to see the company expand into other types of software services that they could offer customers. We'll see if they can do that. The balance sheet. The balance sheet for this company is really good. If you look at their debt to EBITDA, it's well below 3, and they carry a lot of cash on the balance sheet, which is very good. And overall discount. I'll get to that toward the end of the video. For now, let's take a look at where the stock's been. So over the last year, it's had a lot of volatility. And you can see that there was a move on the stock where a private equity group wanted to buy DocuSign, and the stock really rallied. So it went up quite a bit, substantially. From the low to the high, the stock went up 63%. But since that high, the stock is actually down about 18%. So a lot of volatility, but you can see that a private equity group saw a lot of value in this company and was looking at to acquire them. So it proves that there is value here. The company is a $10 billion company, so a small mid-cap software company. They have $2.8 billion of revenue. And the forward PE is just 16.7 for a growing software company. It seems really attractive to me. Other analysts say that it's a good hold, and they think the stock's discounted by 21%. Their revenue growth has been good. It's been really positive. It has slowed down. I think they're getting bigger and bigger, and it gets harder and harder to grow as you get larger. So I think that's the slowing of growth from a percentage perspective might be what is concerning investors. The most recent quarter, they grew at 7.3%, which is reasonable, especially since other software companies are showing very little growth. And some companies are actually seeing that revenue go down. So for the case of DocuSign, they continue to go up, which is a very good thing. This is a high cash flow generating company. In fact, if you look at their cash flow over the last 5 years, it's really exceptional. I like that about this company. And their balance sheet is really strong. They carry a very high cash balance, $1 billion, and they have very little debt overall. Total debt is well below that cash balance. The company has made plans to buy back $1 billion of their shares. It's going to be really good because they're going to take shares off the market and really prop up the stock price for the company. Their earnings were good. The earnings that were announced last week showed positive earnings. The company continues to operate really well. They're trying to create some AI products. I'm not too sure if that's going to be a big product or not, but it's good that they continue to develop products. Again, it'd be nice to see them expand, maybe merge or acquire other smaller companies so that they can become a bigger player in the overall software space. So I'm going to value DocuSign by looking at the free cash flows I expect the company is going to produce and discounting those free cash flows to today's value. That is the method that most value investors use to really establish a value of a company. The second method is earnings per share. And that's a very common way that companies are valued. In fact, that's what really, when earnings are released, that's what Wall Street really focuses on is earnings per share. So I'll use that method as well and then combine the two. Looking at the free cash flows for DocuSign, They are a very good cash producing company, and I expect they're going to produce $976 million in free cash in 2024. I'm going to grow the first 4 years by 5%, and all years after year four will be grown at 4%. So this establishes the free cash flow forecast that I expect from this company. I'll use a 9% discount rate. I'm going to discount all those free cash flows and get to a net present value of all those cash flows in today's dollars. And I'm going to add the cash and take away debt. So I get to an equity value of $19.8 billion. The market cap's only $10.6 billion. So it provides a nice discount of 87% based on the free cash flows and comparing that to today's value of the stock. So looking at earnings per share expected to be $3.30. I'm going to use a PE of 18, and that's because it's a growing company. It's a software company. I like both. And if this was a popular software company, the PE could be upwards of 36. But in this case here, I'm going to use 18. I'm going to have a growth rate of 5% on that earnings per share. That gets me to a stock value of $62.37, but the stock currently is at $51.82. So it provides about a 20% discount. This is similar to the discount that I was seeing on the analyst prediction of the stock. Now, looking at the blended value of both methods, I take more weight on the free cash flow method, using 2/3 of that method and then 1 part of the earnings per share method, arriving at a combined 65% discount on DocuSign. So this is a heavily discounted stock. So am I a buyer of DocuSign or a seller? Well, I'm going to look at 3 areas and just talk through my decision on DocuSign. First, it's all about the company. Do I like the company, the industry? Do I like the business? Do I want to be a part owner? I really like software companies. I think they have a lot of advantages. For example, they don't really hold an inventory. They don't have to buy a bunch of parts, put it together, and then send it to a customer. They write code and then they sell it to many customers, as many as they can. They're very profitable. In the case of DocuSign, they've proved to be very profitable. They generate high amounts of cash. So I love that type of business. I think the management team's excellent. The only thing that's limiting the company is that they are kind of narrow in their product scope, where they do signature capture as well as agreement management and areas around that whole contracting process. It'd be nice for them to break out of that. But overall, I really like the business and would like to be an owner of this business. Second is balance sheet. Balance sheet tells me, does the company have a lot of problems? Am I going to regret buying into this company? And in this case here, DocuSign has an excellent balance sheet. No net debt, lots of cash. They're going to do a big buyback of $1 billion. And they can acquire other businesses if good opportunities exist in the marketplace. Having said that, the balance sheet is excellent for this company. The discount is really high, 65% discount on a software company. That's really good. And this company has shown that their price could be quite volatile and really go up in certain periods of time. That said, I'm going to buy more shares of DocuSign, continue to add to my position. It may take a while, but I think I'll be really happy with this investment in about 2 years' time. So that's my report on DocuSign, what I plan to do with this stock. Hope you found it interesting. I'd love to hear your comments on this company. Let me know in the comments what you think. Thanks again for watching.